So we're going to do this particular video a little differently. There's a few things we already know about NVIDIA. One, that NVIDIA is a market leader by far. In fact, a recent acquisition that AMD disclosed of ZT Systems, some say, many say, that it is out of desperation to catch up to NVIDIA in the GPU space. So the construct of that particular deal is AMD is buying ZT Systems for about $5 billion, and they want to divest the hardware portion of that business and only keep their band of engineers. So really, what it is an acqui-hire for their IP and their people. That's going to then boost AMD's GPU sales in the future, which is really a catch up. To me, it looks like a catch up exercise to NVIDIA because NVIDIA just has such a big leadway compared to AMD and Intel. So that's one that we already know. AMD or NVIDIA is a market leader by far. Number two, NVIDIA has a really, really strong balance sheet and significant cash generation capability. So those are the two things we already know of. So we're not going to go into looking at the balance sheet and the ratios and looking at financial statements from that angle. What we're really going to focus on, given the fact that the stock price, although it's had its challenges over the last many weeks, over the last year has a tremendous trajectory, upward trajectory. So it really boils down to the current quarter, what they're going to disclose. Well, the current meaning their last quarter, last finalized quarter, and what the outlook is going to be for their current quarter or the quarter that they're in. So their October quarter. So that's what it's going to boil down to. And the way this video is going to work is I'm going to walk through my predictions of Nvidia's revenue and EPS and what that would translate to in stock price valuation. And then I'll give you my view on what I would do given the analysis that I've done. So I'll see you guys in the following section. Okay, so just a light touch on their financials, Nvidia's financials here. Total revenue was $26 billion in April of 2024, which was their last quarter. They're now projecting $28 billion. A majority of that $26 billion and the $28 billion, and even that, I think since July of 2023, has been dominated by the data center space. So GPU sales in the data center space, and that's built up of actual GPUs, so graphic processing unit, and networking revenue. If you wanted to know more about CPUs or GPUs, there's plenty of material out there. There's one by Intel. But basically, GPUs are computer chips that are used in high performance activities. So in this world of AI, ML, more and more compute power needed, GPUs are extremely essential. Their customers are the hyperscalers, so the Amazons of the world and Googles and Microsofts. They make and Meta they make up a very high percentage of Nvidia's revenue because their chips are then inserted in those in the hyperscaler data centers, and there's many other customers as well. Um, in terms of their overall financials, then so if I go into their statistics, it's a very solid, financially solid company there. Their gross margins were in the 50s and the 60s, which were very quickly escalated to more than 75%, 78% last quarter. Um, so it's a very solid company. Their current ratios are solid, no liquidity, solvency issues, a very little debt. It's just a rock solid company with a lot of or upward pressure on price or stock price because it's so sensitive to what might happen in this recent quarter that will be released, and then what will come out of it in the following quarter. Um, Now, just a quick look at market share data. So there's various reports out there, but it looks like Nvidia in 2023, which is their FY 2024, so CY 2023, which is the last finalized calendar year, they've shipped 3.76 data center GPUs in 2023, which dominates with 98% revenue share. So just kind of goes to show how far they are ahead versus AMD in the GPU space and especially GPU data center space. Now, data centers are not the only products that require GPUs or have GPUs. There are desktops and notebooks that also have GPUs. Um, there are equipment or computer or desktops and notebooks that work only off of GPUs. Mostly, I'm assuming most of the gaming kind of products, which are really high performance oriented. Um, and there are also integrated GPUs, which are not which have a CPU inside of it as well. So there's a wide applicability of those GPUs. Their NVIDIA's major business units are data center or revenue segments are data center, automotive, gaming. They have professional visualization, and then there's a small bucket called other. So data center is number one, followed by gaming. So that's basically, if you crack the code on predicting those numbers, you basically are more than 95% there. This is the desktop GPU market, and if I go down here and I click on this right here, this talks about discrete desktop GPU market. So discrete means desktops that do not have CPU as well. In that particular segment, this is a little bit of a, I mean, you can already see that the green is Nvidia, the red is AMD, and where one goes up, one goes down. So there's basically direct competition between the two. Intel's basically, you can almost ignore it. But lately, in the last Q1 2024, which was Nvidia's Q1 2025, Nvidia clocked 88%, which was up from 80%, which was an all-time high for Nvidia. So in both those segments, both those markets, Nvidia is dominating. And then the price action has been, um, there's like we said before, the challenges that were that took place in 1st of August. I believe it was that kind of time, that, or was 1st of July. Sorry, the start of July, when that manufacturing data came in, and they're followed by a few other series of events. Nvidia took the hit as well, and when Nvidia sneezes, the others catch a cold. So that's that. But then since then, it's had a pretty decent rally. It's struggled at the 130 level, and so we'll look at that fundamental calculation or the valuation of the stock in a little bit. But that's basically all about the current financials and the technicals at this point. I'll move forward to the prediction part, which is the most important part, the crux of this video, in the next section. Okay, so prediction time. So it's called prediction time because we know it's not going to be 100% perfect. But what my experience in the world of finance and strategy has taught me is that you never rely on one method to come up with one metric. You always have a couple of different metrics and backtest that metric. So that's what I've done. I have a couple of methods up my sleeve. Now, I'm going to follow on my own analysis and do and execute trades that align with my strategy and my analysis. And so you guys should feel free to use this analysis for your own needs, but just make sure you understand your opportunities and risks. So let's go into the analysis now. So the first method that I came up with was the Foundry multiple. If you guys have seen the my video on Applied Materials essentially is the maker of semiconductor equipment that TSMC then uses to make the chips. There's a pretty detailed walkthrough in that particular video, so you can go back and check that video out if you want to understand the semiconductor industry a little bit better. But TSMC's biggest customer is Nvidia, and their mix is growing. So Nvidia's mix is growing. TSMC breaks out high performance computing and other types of uh, chip related revenues that TSMC makes, which is a good leading indicator into Nvidia. So based on my detailed analysis, this is basically the output, but there's a whole lot of work that's gone into coming up with this particular prediction. I come up with 33.89 for NVIDIA's Q2 2025. So their last quarter was 26.04 and 33.89. So the basis of this is growing NVIDIA's multiple on high performance computing for TSMC, and that's really what I've relied on and looked at a pretty detailed way and a bottoms up way to come up with NVIDIA's total revenue of 33.89. Now this is over and above NVIDIA's outlook of $28 billion for this quarter for Q2 of 2025. But NVIDIA always beats their revenue and EPS outlooks. But this is one method. The second method that I've come up with is CapEx multiple. So NVIDIA's customers are Meta, Microsoft, Google, Amazon. That's where they derive, I believe, 40% in overall revenue. And obviously, that percentage is very concentrated in the data center space. So I've come up with techniques to then use their capex numbers. So the four those four companies capex numbers, they've released earnings already, and I've come up with some predictive analysis in what might that multiple be for Q2 of 2025 for Nvidia. That number reveals 32.9, which is lower than the 33 point, I believe, 33.89. So 33.9, 32.9 is my second answer of customer using a customer capex multiple. And then the third one is a very simple past earnings history. So I thought this was there's a really good pattern in this data. So one, Nvidia always beats their earnings. In the past, which was a year ago, they beat their outlook by 23%. They beat their EPS by 47%. So they beat revenue and then they beat EPS by a lot more, probably 2x or more. In the next quarter, they beat revenue by 13%, EPS by 26%. Revenue by 10% in the following quarter, 21% of EPS beat, so on and so forth. So I project revenue will now be, just given the fact that Nvidia is growing in size, that delta of that beat is probably going to get smaller. It's a safe assumption. And that gets me to a 6% beat on revenue and a 13% beat on EPS, which is $29.6 billion versus that $28 billion in outlook. So now we've got three numbers there. And so those three numbers, if I just put that just put that next to each other, 33.9, 32.9, and 29.6, $32.1 billion, which is a median, which happens to be quite close to the customer capex multiple, and which has probably been, in terms of a multiple, has probably been the steadiest, in my opinion, and probably something that is probably something you can rely with relative high confidence, just because of the fact that capex has already been spent. It's not a capex number which is on their customers' outlook. That capex has already been spent. So in the next section, I'm going to walk through an entire P&L, come up with my understanding of the stock price, i.e., valuation, and then recommendation on the trade. I'll see you guys in the next section. Okay, so Nvidia's P&L. So this is the most recent quarter that will be released in a couple of days. These are the last three quarters, and I'm using that median now. So I've got the 32.1 or $32.2 billion in the revenue column, which suggests that growth is decelerating on a year-on-year basis. So 265%, 262%, and then 138%. But remember that Q2 of 2024, or which is their Q2 of 2024, was really when the data center revenue started to kick in. So their base year is not the same as the base year the pattern or the volume of data center revenue has not been the same for base year calculations before this quarter. So that's going to be expected. We're not expecting. I don't think there's anyone in the world that was expecting a 200% year over year. That would just be astronomical. It'd be good, but it'd be astronomical. Nvidia is usually, I've given them the benefit of the doubt that their gross margin, although has shown an upward trajectory from Q4 of 2024 to Q1 of 2025, is going to be bound by some pricing pressure, any other pressure that's weighing down on their margins or their revenue, just because of the fact that they're it's bound to happen at some point. They're not going to be they're not a 100% software company, and these margins are like a software company. So I've been conservative there, and I've said 76.3 is where they will end up in terms of gross margin. I think the their OPEX number, they were already at $3.5 billion. That doesn't scale with revenue. That doesn't move with revenue in the same proportion. Should scale, and I'm showing scaling there, and I believe in that number, that $3.5 billion. Um, there and therefore their OPINC is basically gross margin minus that, and I come up to 65% of OPINC. They'll probably provide. I've calculated an effective tax rate of about 17%, and their net interest income. They have a positive income versus their expenses. So I've assumed that at 250K, and I'm assumed their other income expenses, which is negligible. These numbers are not going to change, are not going to move the dial as much. I've assumed the same as last quarter for net income of $17.8 billion, which is a 55% of revenue. And their diluted shares really don't, I've seen the last few quarters, they're really around the 25 million mark, for an EPS of 0.71, which is a quarter increase of about 11 cents per share. Now, here's the more interesting thing to me. When NVIDIA was when NVIDIA released results in 3Q of 2024, things started to really look up for the company. Year on year was 206%. They were coming up with strong outlooks. Things were already really, really good. Their stock closed the next day at 48.72, which suggested a last 12 months EPS multiple, so PE ratio of 70x. So a PE ratio is the stock price divided by the earnings per share for the last, if it's TTM, then it's trailing 12 months. It was at 70. Fast forward to a quarter later, $22 billion, 265% year over year, really strong net EPS of 49 cents, which is another 12 cents improvement. 66x PE ratio for trailing 12 months based on the next day's closing price of 78.5. Fast forward a quarter later, 103.8 based on the 262% year over year, which was a really, really strong quarter. They also released a dividend, a stock split, and everything. 61, and that was again an improvement of about, this was I think about 11 cents again, and I've got 11 cents as well. So 61 PE ratio and 60 PE ratio. So I know people think that this stock is really overvalued. If I look at trailing 12 months, this stock's actually got cheaper. Now, there's this way to look at it. There's many other ways to look at it. You compare the trailing 12 months PE ratio to other companies in the portfolio, and you'll find that Nvidia is probably more expensive. And to me, that's yes, it's expensive for a reason, because they're a leader by far. And there are other techniques as well which I follow, discounted cash flow, and those are more long-term techniques. I'll say this though, Nvidia is well within my range. I am definitely going to execute some bull trades, because I believe that the quarter is actually going to be a net hit, and a good quarter for Nvidia, or another good quarter. Now there are some tailwinds for it to not have such a good quarter. One, there's upward pressure at 130. We already know that. People might not want into the people might feel it's already overvalued. Um, they might they might say that Blackwell chips, which was the most talked about thing in the last quarter, is further delayed, which might impact their revenue outlook, and their outlook may be not as rosy as people may think of it. I've done my analysis, and I've made my decision. So all the best in the journey of Nvidia trading. And yeah, like, share, subscribe for content like this, and I'll see you guys in following videos. Good luck with Nvidia. So to summarize, folks, I remain very bullish. on Nvidia's Q2 2025 results that will be released on Wednesday. I'm also betting that their Q3 2025 outlook is also very strong and that they will also beat that outlook in a quarter from now. Nvidia is a must add to anybody's portfolio that needs and wants exposure to the world of artificial intelligence. To me, the hardware side is very different to other companies using LLM models and using Nvidia's technology because Nvidia's hardware products are already being sold. We already see the return on investment and they already have really, really strong outlooks. So it's not a hype, 100% not a hype for Nvidia. My the stock price of 130 is still well within my price target, and I've outlined my analysis. So good luck with trading, and see you guys in the next videos. Take care.